Good morning. Welcome to Trading Hour. It's a Friday morning. I'm Reema Tendulkar. With me is Hormuz Fatakia, and markets are trading firm. There has been a global rebound. Indian markets are currently up close to about 1%. And so far, the first 2 hours of trade have been very, very steady. We haven't seen any dip, nor have we seen a big, push up. Markets had a gap up opening. We've largely held on to all those gains. Midcaps moving in step with the frontliners. Midcap index a gain of 1%. Good advanced decline ratio also to back it.
Indeed, it's a good start as of now. The bulls were needing that kind of a start after the kind of week that they've had. But then again, the question is very important. The Nifty is at exactly that level where it has been getting a lot of supply all through the week, which is 24,350. And the question is, will that level sustain as we go into the day? We are slightly off the highs of the day. We were up over 24,400 at one point of time. But now we have gotten below that mark, and now we are at 24,350, which is that very decisive level for the Nifty. Well, we were down 2.5% this week, and it is possibly likely that we will end lower for the week. But the only question is, how lower can we end?
So far, at least, I think the benchmark indices are down 1.5% for the week. So 1.5% on the Nifty down for the week. The midcap index is down 1.1% for the entire week. The midcap, the banking index will also come up, and that's seen a cut of about 1.5%, a little more than that. So week to date, we are likely to end with a bit of a correction, but the durability of the pullback is going to be watched very closely in the second half. But let's begin our show with a corporate conversation. VA Tech Wabag, the company has seen a top-line growth of 13%. Profits have gone up 10% on a year-on-year basis. Skanan Prasad Sitaraman, CFO of the company, is now with us on the show. Sir, thank you very much for joining in. Starting with your top-line growth of about 13%, your long-term guidance is getting a 15 to 20% kind of growth year after year for the next 3 to 5 years. So in that context, Q1 is 13%. So are you confident that for the full year, things will pick up and you will end the year within that guided band of 15 to 20%? And was Q1 slower than your expectations?
Hi, good morning. Thank you very much for having us on your show, and greetings from Vienna. We did our first celebration of the centenary because we are celebrating 100 years this year. So
congratulations.
Congratulations here. Thank you. And yes, it's also a good occasion to start the year with a successful quarter. We have grown year over year by 13%. Till the last year, there was this realignment of our business based on the strategy in terms of reducing our European exposure, improving our EP share of business, going more towards industrial. All of those are largely done. And now we are seeing, like we guided during the year end, the growth has started now, seeing in the top line. And we are confident that we will be in this medium-term outlook band of 15 to 20% going forward.
For the year, 15 to 20% on the top line is likely?
Yes, 15 to 20% is a band that we have given, and we are confident that we can achieve that.
For this year. Was Q1 slower than what you were anticipating? And what's the mix between international and domestic going forward? And even in a word on margins, because again, it's coming at the lower end of your guided band.
See, it's always a mix of projects that drives the margins, and we had guided a 13 to 15%. As the volumes improve, you will see that the margins also reflect the kind of projects that we are doing. From a growth perspective, usually the first half starts slow, but towards the second half, you will see the growth coming, and that's why we had given a more medium-term outlook instead of a quarter-over-quarter outlook.
Mr. Sitaraman, good morning. Thank you so much for joining in, and many congratulations on the century as well for your company. I wanted to ask you about your order book, sir. You've spoken about your current order book being around 10,700 crores. What was the current order book in the first quarter? What was the order inflow that you received in the first quarter? The guidance was around 4.5 to 5,000 crores, if I'm not wrong.
See, we had also mentioned during our year end that we are confident of growing our order book in a very strong way through this year. And here we are happy to see that we are already a preferred bidder in projects of over 6,000 crores, driven by the Middle East and Africa region and also the India region. All these are advanced technology jobs in desalination, in wastewater, both from municipal and industrial marquee clients. So we are seeing this orders coming through, and you will see in the next two to 4 months that we will start also getting these orders, and we will be able to announce them. But today we have also said it in our investor presentation that we are a preferred bidder in projects worth over 6,000 crores.
And what do you plan on ending the year with, sir?
We gave a 16 to 17,000 crore kind of guidance on the order book, and at the moment, with the kind of orders that are coming, with the pipeline that we are seeing, the strong outlook that we are seeing, we are confident of being in that range.
This 6,000 crore being a preferred bidder is an international, or is it a mix?
It is a mix, but largely driven by international.
Okay, and you're confident that you will end the year with an order book of 16 to 17,000 crore rupees.
Correct.
Right?
We are well on track towards that.
All right. Between international and domestic, where do you enjoy higher margins?
See, margin is very project specific. But yes, the international part gives us better margins because of the specs, because of the technology appreciation, and also the fact that we are able to do more EP projects. So a very plain vanilla answer, the international projects are usually better than the domestic projects, but it's very project specific and what kind of technology that we deploy.
Mr. Sitaraman, in your previous earnings call, you had mentioned that you have a very strong pipeline in the Gulf region. The issues that are prevailing currently in the Middle East, are you facing any sort of impact because of that? Or is the pipeline still continuing to remain very strong? And if you could quantify that for us as well.
See, we've already said a good amount of the close to $1 billion of bids that we had done was mainly driven by the Middle East region, and more importantly, Saudi Arabia, where we are seeing desalination being a major traction, and also the rest of Middle East and Africa. Till now, we have seen this region being strong, and we expect it continue to be strong. Also, the preferred bidder status, which I mentioned, has a good chunk of orders from this region. So we are very bullish about the Middle East. We don't at the moment see any issues around the robustness of the pipeline. But yes, we will keep a watch on the geopolitical movements. But at the moment, we don't see any difficulty in this region. We are executing a few projects, and they are all going well.
Thank you very much for joining in. That's Tech Wabag for you, maintaining their medium-term guidance of 15 to 20% on the top line, likely to achieve it this year too. Margins will stay between 13 to 15%. Typically, work picks up in the second half of the year. So as volume growth picks up, they expect margins too to trend up with that. The company is a preferred bidder in orders worth 6,000 crore rupees, and they're likely to end the year with an order book of 16 to 17,000 crore rupees. So those were some key numbers from the management. Get into a break. On the other side, we'll put the spotlight on Ola Electric, which made its D3 debut today.
Back with us here on Trading Hour. On to the big listing of the day, that is Ola Electric. The stock listed at its issue price of 76 rupees, but since then has seen a very strong response from that. 16% higher now from its issue price. Sonia is joining in with the details. Sonia, a very strong listing.
Absolutely, very strong debut coming in from Ola Electric. As you rightly pointed out, 16% higher right now. It listed at 76 rupees a share versus the issue price, which was 76. And then post-listing, the rise started for Ola Electric. Now, Ola, as we know, is India's largest electric two-wheeler manufacturer. It has the highest market share in the EV space currently. Its market share as on June stood at 46.2%, and the second closest peer, TVS Motors, way behind at around 17%. If you look at the financials of Ola Electric as well, the revenue growth has been very strong over the last couple of years. In fact, in FY24, the revenue growth was 88.4%. The company, though, has been posting losses for the last 3 years, but has suggested that they are on track to break even. It reported a loss of 1,584 crores in FY24 versus a loss of 1,472 crores in FY23. Now, the company intends to utilize 1,600 crores of the funds raised for investment into research and development. They are looking to expand their product portfolio into electric motorbikes next year, and they are likely to unveil a plan on the 15th of August itself. The big story here, or the bigger story rather, is the growing electric vehicle industry. The Indian electric two-wheeler industry is expected to grow at a compounded rate of 11% over the next couple of years to reach a size of $35 to $45 billion, and Ola Electric is at the forefront of that EV adoption. The company is now focusing on cost saving as well by producing lithium-ion cells in-house. That has been the biggest cost for the company. Bhavish Agarwal in the recent interview did mention that by manufacturing these cells internally, the company aims to eliminate 25 to 30% margins charged by external suppliers for lithium cells. So on the profitability front, the work is on. They're reducing costs as well. And of course, it's been a very strong listing for Ola Electric. Back to you.
Thank you very much for that. Earlier this week, we also chatted with the chairman and managing director, Bhavish Agarwal, and asked him about the EV maker's path to profitability. Listen in to what he had to say.
Just wait for our Q1 results, which will be out soon after the listing on 9th August, and you will get to see the financials then. But thematically, if I tell you, if you look at our business in FY24 over FY23, we grew revenue 90%. And our revenue in FY24 ended up at around 5,300 crores. So this shows you the kind of improvement the financials already in the public domain showcase. And this is because, in manufacturing businesses, there are two themes I want to leave with your viewers here. In manufacturing businesses, as you grow scale, and you've seen very significant volume and revenue growth, your cost structure, the factory investments, etc., don't scale linearly with it. In the EV era, the cell is the heart of the vehicle. And hence, 4 years ago when we began this company, we decided to focus on making our cell in-house. And if you look at the amount of cost contributed by the cell, if a vehicle costs 100 rupees, the cell costs about 30 or 35 out of that. This is like an average across multiple companies. The entire margin that global cell companies make, as well as a 5% duty that cells have when they come into India, all of that money we will save when we start using our own cell in our vehicles. Step by step, all that margin on 30% cost, assume saving 20-30% margin, all of that will eventually come into our books. Overall, scooters today is about, let's say, 1/3 of the two-wheeler market. The two-wheeler market is 20 million. The scooters is 7 million. So if you say in 2 years, 30% is electric. So that's about 2 to 3 million in just scooters. Motorbikes will begin their journey when we launch our products later this year because there are no other good quality products in the market.
The management, Bhavish Agarwal there of Ola Electric, 16% higher from its issue price on its Dalal Street debut, extending gains now 17.5% higher, nearing the price of 90 rupees. By the way, the Nifty continues to remain near that mark of 24,350, but the IT index has staged a bit of a comeback in today's session. That is the top sectoral gainer in today's trading session. 1.5% higher is the Nifty IT index, and after 6 straight weeks of up move, the index was down 3% last week. It was down 3% this week as well so far until Thursday's closing, and now it's clawing back some of those losses. 1.6% higher on the IT index, and some flashes on your screen as well with the Oil India management in its con call saying that it is on track to achieve its guidance on the oil and gas production, and it's showing up on the stock price as well. Remember, the earnings came out last evening. At the highest point of the day is Oil India, 6.5% higher at 650 rupees. Time for a short break here on Trading Hour. Up next, Mitesh Thakkar joins in with some technical ideas and his views on the index as well. Stay tuned, back on the other side.
Welcome back. Oil India is one of the big movers of the day, 6.5%. Remember, I rallied even on Wednesday, reacting to ONGC's strong numbers. But today, Oil India, after the Q1 numbers, which were good, and plus even in the conference call, which started at 11 o'clock, the company said they're on track to achieve their guidance on oil and gas production. So firm commentary, and the stock continues with its up move. It's now up 160% year to date. Cochin Shipyard is another one where the earnings have been strong, perhaps justifying the kind of rally that we've seen. So Cochin Shipyard has reported about a 60% jump in revenues and a 76% jump in the company's profitability. This is a stock which you can see is up 250% since the beginning of the year. But on the way down, Lemon Tree gets hit again. So Lemon Tree is down another 4.5%. Remember, it was under pressure yesterday also. It's weak. RVNL was disappointing set of numbers, came out with results in the last 1 hour of trade. The stock tanked and it's fallen another 4%. And then you've got a few oil marketing companies like HPCL under pressure. Apollo Tyres is weak in trade. But Ola Electric has been a big mover. And you were even talking about KFin Tech, which has gained another 8%.
Among the top gainers on the Nifty 500 is KFin Tech, and all of these stocks, be it KFin Tech, be it CDSL, all of them have seen sharp moves over the last 2 to 3 sessions. And I'd also like to mention that Cochin Shipyard, even after correcting almost 30% from its peak, it's seeing that bit of a relief in today's trading session after the numbers. But RVNL's numbers were, of course, disappointing. The stock fell yesterday and it's declined today as well. And along with it, it has taken most of the other railway peers as well. Ircon's numbers were not great either. That stock is down today as well. And in reaction to that, even stocks like IRFC, which have seen a very sharp move all through the year, are also trading lower in today's trading session. But good time to get in Mitesh Thakkar for a quick technical check of the markets. Mitesh, still 24,350 remaining that big hurdle for the index. Do you think that we'll end the week at least above these levels, or do you see more supply coming in at that level?
Yeah. So almost I think 24,400, 350 zone is the first area, because one, the gap starts there, two, the retracement and the intraday moving averages coming over there. I'm also waiting if we will be able to clear this. One, my view is that we might not be able to do that because the structure is negative. Even if we do that, then the upper end of the gap will come into play, which is 24,650, 670, 686 zone. So I think you might get a further 180, 200 point kind of a pullback in case this level is captured. But for the time being, while we haven't got a reversal signal of this bounce back, which has started today morning, but there is some lack of strength around these levels of 24,400. So let's see, in case we start getting past 24,400, then you wait for this bounce back to continue and extend on the upside, and then take a look for some kind of weakness around 24,650, 700 to take a short trade. But otherwise, in a wait and watch mode for the time being.
Do you have any stock calls that you would advise?
Yes, I think the trading, on stock specific basis is much easier, because one, you have a lot of stocks to track, and something or the other is happening as an event on the chart. So BSE, I think, has given a strong reversal today. That's a buy with a stop at 2640. Look for a target of around 2750. And the other one which I like is Shriram Finance. I think, that's another stock which has done well. In fact, it has not participated in the falling market and now is again showing good traction on the intraday chart. So buy here with a stop below 2900 for targets of 3050.
Anything, since you mentioned BSE, Mitesh, anything on its peers as well, be it CDSL or KFin Tech? Both of them have seen some very sharp moves this week.
CDSL, I do like. I've not been taking KFin Tech, but CDSL, I think, a good breakout today. Just nearly making a fresh highs, or rather touching the last week, the earlier highs. My sense is that I think, once this 2580, 2600 level, there's a mild pivot over there on intraday charts. If that is cleared, I think the stock can head towards 2800 plus levels to maintain a very positive bias.
CAMS is another one in the entire capital marketplace, which is also up 3.5%. But Mitesh, thank you very much for that. Let's get our viewers some opinion now. Earlier today, we had a chat with Gautam Dugar, Head of Research, Institutional Equities at Motilal Oswal Financial Services. He spoke about market fundamentals, his top sectoral picks. Listen in.
So we've not seen any correction. Then despite having a very muted result season, the market has been very charitable with most of the stocks. Yes, there is a growth headroom. Valuation, I suspect there is not much valuation headroom left. Your mid-cap Nifty is trading at 33p, which is at a 60% premium to Nifty. I have not seen such levels of premium in the past. A small cap is at a 40% premium to Nifty. It usually trades at a 20% discount. So absolutely no headroom for mid and small cap indices. Pharma has been a standout performer for this earnings season. Earnings growth is 26% for our coverage universe, where 15 companies have reported so far. And metals have actually beaten expectations because of some solid outperformance from Coal India and Hindalco.
Gautam Duggar there, no valuation headroom for mid and small caps. I guess we've been saying this for a very long time, but the indices are in a world of their own. But that is how the market has been. Time for a short break here on Trading Hour. Alok Sehgal of Nuvama joins us on the other side to discuss the company's new expansion plans. Stay tuned, we'll be right back. Welcome back. Now, Nuvama Private has announced the launch of its operations in the Dubai International Financial Center, and they also have plans to expand their business to Singapore in the next quarter. Now, Alok Sehgal of Nuvama is joining us now to discuss this further. Alok, good morning. Thank you so much for joining in. But first up, would like to ask you about the rationale behind expanding into the Dubai market. What are your expectations from this move? And if you can also couple that up with telling us how big is this private business as of now and what rate is it growing at?
Sure. Thank you so much for having me. Let me start with a quick background on the Nuvama Private business. So today overall, and we recently reported our results. So Nuvama Private overall AUM is now 1,90,000 crores, and Nuvama Group AUM is closer to now 4 lakh crores, making us one of the largest wealth managers in India today. And one of the recent trends that we have been witnessing is that Indian families are looking to for diversification, set up a base outside India. And two favorable destinations that Indians are preferring. One is Dubai and the other is Singapore. And there is also a very large interest that is coming from global Indians, NRIs, who want to participate in the India growth story. So we being India specialists, we want to offer India solutions to this diverse set of clients. And therefore, Dubai and Singapore both offer us great destinations. We've gone live in the IFC with a Category 3C license, which allows us a full wealth management operations in Dubai. And similarly, in Singapore, we received the wealth management license. We've become operational in Dubai. We have now a team in Dubai. Our office is in place and we're ready for business. Singapore, we should be ready by the end of next quarter, and hiring is going on there.
Alok, congratulations on that. Just getting some numbers in. You said the AUM is about 1.9 lakh crore. When you reported your Q1 numbers, Nuvama Private reported a revenue 131 crore rupees, a growth of about 11%. How large is the India private wealth market, and what would your market share be?
So if you see, there is data which is reported in terms of the number of HNIs, ultra HNIs, and we can keep on talking about that. But roughly, if you see the overall HNI wealth in India is, as per various reports, which are in public domain, is between 1,70,000 crores to 170 lakh crores to around 200 lakh crores. Is the overall HNI, ultra HNI wealth in India. That is the rough size of the market. And today, if you see, the entire wealth management industry is managing close to, roughly 15 to 20% of this business. So the organized wealth of this pool is only 15 to 20%. And of that organized wealth, we are amongst the top players. So the size of the opportunity in India and the growth that is happening in India today, both through new entrepreneurs coming on board, existing entrepreneurs, some of them exiting their businesses, and new capital coming in. This market itself is growing at a compounded rate of 15 to 20%. And that is where the size of the opportunity makes it very large. And for the larger players or all established players, actually the macro opportunity is very, very large. So that is something that, I would look at that. I would look at it from that lens.
So Alok, with this expansion in Dubai today and eventually even Singapore, where you are planning to set up shop, what would your total addressable market increase to? Do you have some, when you set up a shop somewhere, you would have certain internal estimates of the kind of growth you will be able to achieve, the penetration. Can you share some of that working behind this move?
So I'll give you one small data point. If I look at the entire, just the GCC population, when I say the GCC, it's the Middle East population, has 3.2 million addressable NRIs for us. And that population today, as per our estimates and as per our own internal research, today does not have too much access to Indian ideas and Indian products, because a lot of these people have moved there 30 years, 40 years ago, and maybe 20 years ago. So while they still hold, because in GCC you don't get the local passports, they still hold Indian passports, but their connection to India is actually just a travel. And this population is looking at a very serious now opportunities to put money in India. And with the opening of the GIFT City allows us to have manufacturing at the GIFT City level, which we can offer them products and ideas to this population. So first question is, there's 3.2 million NRIs. The second bifurcation of that is that if I look at the ultra HNIs and, the family offices based in the GCC region, there is, at least as per our research, there is a number of 1,500 to 2,000 absolutely large ultra HNI base that is there. And we estimate that the entire international business for us over the next 3 to 4 years should start contributing at least 20 to 25% of both revenue and PAT. We feel that the PAT contribution will be higher from offshore because while the costs are higher there, the actual margins available also in offshore are higher. So that will actually balance out the cost. And we are confident of at least a 20-25% top line growth from the offshore business for us.
As you mentioned ultra HNIs, Alok, would your target market only be ultra HNIs or the NRIs or the persons of Indian origin, or you'd be targeting those of other nationalities as well? And what about the product suite? How is that going to look like?
So I'll address the target market first. We will look at NRIs, people of Indian origin, HNIs and ultra HNIs. So you have a large, significant expat CXO population there, which is also somebody who are professionals there. So private equity managers, entrepreneurs also are somebody we want to target. And then there are obviously the HNIs and ultra HNIs and family offices. So that is something that we want to target. And the product suite is obviously, we are tying up with the local banks there in terms of the dollar ideas and dollar products. But the other idea is that we also are beginning to offer them India alternatives, India strategies, both public markets and private markets, both in rupee and dollar. Because, rupee, obviously, we have the entire product suite ready in India, and that is just business as usual for us. But also we are building out a very strong dollar platform. We've already launched 2 ideas on the dollar side from Nuvama Asset Management. One is a long short strategy on Indian markets, and the other is a pre-IPO private equity strategy that we have launched. So we have started with 2 strategies. We intend to also do real estate and credit strategies going forward, because we are seeing a lot of demand for these sort of opportunities in global markets as well, especially investing in India for these opportunities. So that is our day 1 product suite. And but day 2, as you rightly asked, that are we looking at other nationalities? The answer is yes, because as we are starting to operate, and we are also hiring bankers, a lot of these bankers have clients from who are Emirati or locals, and they're also seeking to invest in India. We've in fact been approached by certain family offices of the GCC region who want to work with us and partner in accessing India. And we are seeing that also as a large opportunity. And that is something that progressively we will build at. But our day one plan is NRIs and Indians. And this is our, step 2 or day 2 strategy, if I can say that.
Alok, we leave the conversation here for now. July mutual fund data numbers are out. It looks like another month of stable equity inflows. 37,000 crore of equity inflows in the month of July versus 40,000 in the month of June. The breakup is also available for you on your screen. Largely steady. July was also the budget month, so there were lots of events that the markets were grappling with. We'll slip into a very short break. We'll come back and analyze these numbers in greater detail.
Welcome back. You're still tuned into Trading Hour, and the important numbers that are flashing for you on the screen, the July mutual fund data that we are talking about. If we talk about all the numbers, in fact, the breakup suggests that yes, while the numbers look stable on a month-on-month basis, it's a slight decline that we are seeing in terms of equity inflows in the month of July. They've come in at 37,000 crore rupees, which compares with the record high numbers that we saw in the month of June. And that's why also this was something which was expected. A lot of events in the month of July, as Rima was mentioning earlier, budget being the biggest one of them. There was a lot of volatility in the markets that we saw as well. Large cap funds, that is something that we should be looking at. It was 970 crores in the month of June. This has come off from those levels to levels of 670 crore rupees. And even in the small cap and the mid cap space, we have seen these flows ebb a bit in the month of July. Now, do remember, we saw that massive recovery from election date levels. And from those levels, we were expecting these numbers to come off anyway. And that has been the case again. Small cap funds, 2,100 crore rupees are the inflows, which compares with 2,200 crore rupees on a month-on-month basis. This number is largely stable this time around. If you look at the other numbers as well, something like a mid-cap fund, that should also come up for you on the screen. That is where we have seen a bigger fall. So it's around 1,600 crore rupees, which compares with 2,500 crore rupees. And this is at a 4-month low. In fact, we are joined by Swaroop Mohanty from Mirae Asset Management. Swaroop, good morning. Thank you so much for joining in. Well, the basic numbers, equity inflows at 37,000 crore rupees, large cap inflows at 690 crore rupees. We have mid-caps at around 1,700 crore rupees. It is all a fall versus the month of June. But what do you make of these numbers?
Yeah, so interesting. No, it's a very interesting time to understand the change in probably the investor psyche, moving out of the core allocation and moving now to probably sectoral or the what we call the satellite side of the portfolio, or it could be just blatant return chasing. Time will tell what it is, but clearly we are seeing an underlying change in the mood of investors, and they're shifting out from what used to be the core side of the portfolio and looking at adding tactical side much more. This we saw for the last 2 years in the form of the small cap funds, which are slowly tapering now, and that's kind of shifted to side, and these are interesting changes and shows either the change of the present investors' mood or the new the new demography of India coming in and the risk-taking ability changing. In 2016, mid-cap investment was considered risky. Today we are looking at bulk of investments in sectoral. So that's a sea change in the way investors perceived equity investing is my submission.
Yes. And you know, Swaroop, you speak about sectoral funds. This time around as well, it's around 18,000 crores coming in just from the sectoral funds. We had 15 NFOs as well this month, which compares with 17, of course. So do you think it's largely led by these newer funds that we are talking about and not the existing flows? Swaroop, can you hear me? Okay, looks like we are not able to hear Swaroop for now. Swaroop, can you hear me? Okay, we'll just try connecting with you again. But just to give you a sense of the number of NFOs, in the month of July, there were 15 NFOs. And if we talk about the funds raised via them, it's around 16,565 crore rupees, which compares with 17 NFOs in the month of June, which raised around 15,277 crore rupees. So definitely a bulk of this money is also coming in from NFOs, out of which we had multi-cap funds in terms of NFOs, which garnered around 3,945 crore rupees, sectoral and thematic funds, which garnered around 9,790 crore rupees. This is all, of course, via NFOs, and in total, sectoral funds are again at 18,000 crore rupees, which compares with the 22,000 crore number that we saw in the previous month. Of course, the SIP number will be very important to track because while on the gross number, we are seeing record high numbers. The net numbers have shown that there has been a decline. The hybrid fund data also suggests that there's a big increase in hybrid fund flows. And of course, we've been seeing those changes because of a lot of changes in taxes as well. We'll do one thing. We will slip into a break for now. We'll analyze the numbers again and get you more conversations on the other side.
Welcome back, and the management of Gateway Distriparks now joins us to discuss the quarter gone by. It was a slightly subdued quarter for them in volume terms. The Red Sea conflict, the freight rates and container shortages have impacted their volumes. Now we have Prem Kishan Gupta, the chairman and managing director of the company, joining in to talk more about the road ahead for the company. Mr. Gupta, good morning. Thank you so much for joining in. Your volumes for the quarter were slightly subdued, if I can say that. The railway volumes were down around 8.8%. Have you seen volumes pick up in the current quarter, and what do you expect the year to end the year with in terms of volume growth?
Yeah, good morning and thanks for having me on the show. Yes, the volumes have come down in Q1 and there are various reasons. Everyone knows the Red Sea conflict is snowballing into shortage of ships and containers. So the imports are less, and the other thing is that the freight rates have gone up so much that the low value cargo like scrap and waste paper, their volumes have come down, their imports have come down. So all these put together, Q1 was a little subdued, but we can see some slight improvement in this quarter and hope that the macros improve. Q1 was an election period also, so it was a little bit slow. But now we see some volumes coming in.
So for the month of July, sir, can you tell us, or even in the first half of August, what were the volumes?
See, July was better than June, and so far August is concerned, it is again slightly better than July. So as I said, things are improving. Even exports, which had a lull period, is now picking up, and we can see some exports also going out of India. So that overall position will increase our throughput and imbalance that we have, because when the imbalance is there, we run empties, or the double stacking is less, and that affects our margins in that.
So then for the full year, sir, what would CFS volumes look like and rail volumes?
See, CFS volumes in Q1 have remained stable, and even the margin has picked up a little bit. However, the rail volumes dipped in the first quarter, so we will try to make it up in this quarter by having some additional volumes. So overall, CFS, it seems the activity has picked up, and we have done some good volumes in the month of July also.
So what about margins then, Mr. Gupta? Your margins for the current quarter were around 24%. Do you expect to end the year with this kind of a run rate? Or maybe let's just talk about the first half for now. What do you expect to end the first half with? And do you expect the second half to be better than the first? And also give us some color on the EBITDA per unit as well.
See, we will have some increased EBITDA in this quarter. As I said, the double stack volumes have come down in Q1. And that has impacted our margin in the rail business, whereas in CFS it has gone up. For the first half, you see, last year first half was very strong. So we do not expect it to be that strong in the first half, and second half it is too early to say. EBITDA per TU in the rail business is something around 9,400 rupees per TU, whereas on the CFS side, which has dipped to 3 digits, is now back into 4 digits at about 1,350 per TU.
What's the margin outlook for the full year in Q3, Q4?
Margins will definitely be over 25%. So we'll pick up from the present 24% that.
And what will drive that improve from 24 to 25% plus?
Additional volumes and the double stacking on the rail.
Got it.
Mr. Gupta, you are also in talks with operators to sell some of your CFS assets, and the value of your business currently is around 1,000 crores. If you can share any updates on that, is there been any progress on that front?
Yes, we are progressing, and we will be sharing some data with potential investors. So depending on the appetite of the new players who want to enter the CFS business or who have captive business, valuation, it is difficult to say now, but in that ballpark or even higher than that.
Where have talks reached with potential buyers?
No, we have not yet reached, but we are in the process of preparing an IM. And we are in the process of shortlisting the investment banker also.
By when do you expect to complete the process, Mr. Gupta?
Well, as I said, the valuation should be right for us to exit this business, and so it all depends. We should be talking to the potential investors somewhere later this quarter or early in the next quarter.
What about the land that you have, Mr. Gupta? How are you planning on utilizing that? So around 500 acres, if I'm correct.
See, most of that land is in the rail business, but in CFS, yes, we have some prime land, and so when we prepare the IM, there will be a value attached to the assets that we have, the land and the warehouse and other, construction that we have done on that. Then there is a value for the business, and then someone who wants 5 CFS at a go, I mean, a running business, so we want a premium on that. So it all depends, how the valuation is looked at upon by the potential buyers.
Thank you very much, sir, for joining in. And those of you who don't know what IM means, it's basically Information Memorandum, which gives investors a comprehensive overview of the business that Mr. Gupta is looking to sell. So they've started preparing the IM. They're looking to hire investment bankers. And once they agree on the valuation, that's when they'll seek out potential buyers. The stock is down 1.5%, muted Q1 volumes, but the management is confident that things will pick up. July has already been better than June. We will wrap up on Trading Hour from the entire team. Thank you for watching. Don't go anywhere because Halftime Report is up next.